Thank you so much for being here on this Saturday event. So, I really like these kind of Saturday workshops. The markets are closed and we can kind of, not be distracted and kind of focus in on whatever, we're going to be talking about. So today, what I'm going to talk about and make sure, again, it's interactive. So if you have a question, please feel free to put it out there. So we're going to talk about how I find, trades. And so we're going to look at, the kind of the process that I go through, which, it involves trading patterns, the tools I use, and then also the option strategies that are used in this process. So a little background on myself, I've been actively trading now for started back in the mid 80s. So that gives you an idea. And I was fortunate enough to get in with a company called Coastal Corporation when I got out of college, and they actually had a training program where they would bring you in and actually put you through this program to teach you how to trade at that time crude oil and various oil products. So Coastal was a integrated oil company out of Texas, located out of Houston, Texas, and that's where I was. And so I got a job there, and they sent me down. First part of the job was sending me down to one of the refineries in Corpus Christi, Texas, for about three and a half months or so. And they had a big refinery down there, so it was really a fantastic experience. Put me down there and just kind of got me involved and just kind of, looking at how they bring in cargoes of crude, put it in the refinery, process it, put out different products, gasoline, diesel, fuel oil, things like that. So it really got you, the foundation, the fundamentals of, how all of this would come together. So you kind of feel it, And so spent about three and a half months there, just kind of getting my feet, grounded as far as the oil trading and process. Then they put me in their tanker cargo group. And that involved, charting tankers, learning all the different operations of putting crude oil, going to different locations, all the maintenance and all the, process of doing that. And then spent a couple months there, and then finally got into the cargo desk side of things. And then without much time being spent there, I was sent out to Singapore for spent about 2 years out there, and that was fantastic. Spent couple of years out there trading products and Asian crudes. So just a really fantastic start to my career. And then, came back to the Houston group, and then I was able to got a job with this company called Transworld Oil, which at that time, they were the largest oil trading company in the world. It was Transworld, Mark Rich, and Fibro. So that was where everything really started going crazy with my trading career, and spent about 17 years with Transworld, about 16 of those years out in Bermuda where their corporate headquarters were, and ran the international trading group for about 10 years. So that was a really unbelievable experience. And so we at that time we were involved in all the different energy sectors, from refining. We had a refinery on the East Coast, to trading crude and products all around the world, et cetera. And then we got really big into foreign exchange, all the different futures markets. So and then finally into options back in the mid 80s. So that was a kind of a brief introduction, and I've never looked back since. So again, thank you so much for everybody being here, and let's get rolling. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Hey, thank you there, Keith. Yeah, if you don't mind, I'll pass that on. Here's from one of my members. Really appreciate that. Hold on, let me copy and put that into the chat box here. So anyway, thank you so much for that. I really appreciate it. Now, in trading, the reality is that as an individual trader, we really have to do a lot all alone, So we're sitting at our desk every day, and, it can be kind of a lonely type of job, but, that's part of it. Now, as you know, one of the most time-consuming parts and very expensive task is just how to go about trying to find those really high probability, good winning trades. And so over the years, I gradually combined what I've learned from, when my employers paid for everything, which was great. But from that, I went on and I developed my own kind of research process and resources that I use for, looking at the different companies, different stocks, different sectors, things like that. And then I put together and developed my own proprietary technical trading system or indicators to use for my trade setups. And then I went about and developed a strategic kind of option guide for selecting which option strategy to use, and then when to use it for the best results. So this process evolved into a process that allows me to find really the kind of the best trade setups and the best then option strategies to use based on the current market environment we're trading. Now, what I did recognize though, based on my, four basic, 4 decades of trading, is that my best and most profitable trades all had some of the same underlying characteristics. So what I did is I defined my winning trades. What made those trades winners? I kind of broke it down and looked at, looking for that common denominator of the winning trades, and also looking at the losing trades too to see what I did wrong. So what then I ended up doing was defining these trading characteristics, and I developed a repeatable trade selection process that helps me to identify and find these types of trades based on kind of a 13-step process. So I call it kind of my systematic trade selection process. So what we'll do first is let's take a quick current market review. And so what I like to do, and I do this about at least once to twice a week, I want to do what I call a top-down market review of the markets to kind of get you grounded as to where the big picture is, and then break it all the way down to the smaller time frames that you trade. And so a couple of ways we can do this. First, probably the easiest and best is use the S&P 500, which is kind of the reference index that all the markets go by. Now, when I was running the trading group, we didn't really have all these good technicals and charts and stuff. So what we would do we would do our market, what I call top-down analysis, using fundamentals. And so we would collect all the fundamentals from our different offices around the world, and then we try to form a picture of what is the macro environment that we're trading right now, if it's crude oil or it's products or whatever, and then break that down to what we're currently looking to do from a day-to-day basis. So what we're going to do here first to start off with is we're going to look at the macro time frame. And this is what I typically will use the monthly. So I refer to that as the macro. So this is the S&P 500 CBOE index. So for the S&P 500. Now, you can see we've been in a fantastic uptrend where we actually kind of broke out. We were, you can see with the sideways price action, this lasted from May of 2022. We just went sideways until it finally started breaking here to the upside in April of 2023. So you can see my indicators, they're all indicating this cycle, right? So these are indicators based all on momentum. So they're kind of 3 different momentum type measurement indicators that I use. And so all 3 of these actually were starting to fire at the same time right there. So you can see that orange arrow, green, and yellow. So these are based on momentum. So the orange is a momentum reversal indicator that I use. And then my cycle 1 right here is my really kind of fast momentum measurement indicator. And then I confirm that with cycle 2, which is also momentum, but it's a slower. But the first thing you'll notice, and these are all tools that I've developed and use, and that are also available to you. But these are what I use for finding my trades and sending these out with my alert service. So first off, see the magenta purple arrows? These are what we call a cycle reversal. So you can see where that white crossed over the yellow. That was given the signal for a cycle reversal. So what that tells me, that's an indication, an alert, not the signal, the trigger, what I call the trigger, but that's an alert that we might be getting a cycle change. And let me just kind of scroll back and I'll show you how great this thing works. 1 second here. I'm going to scroll where you don't see the current time. So here it is, kind of like in real time if we're going back. So here we are, back here on the S&P 500, and we get the first cycle reversal signal. That was back on January 2023. You see that right there? Now you can see my momentum is the histogram. The momentum is starting to push up, right? Starting to move higher. Now down here, this third row down here is my reversal indicator. So you can see it's starting to actually cross. Now this is the monthly, okay? So it crosses there. We got a cycle reversal. That's an alert, not the signal. And then you start seeing things really start to develop. Now I have my momentum reversal arrow, and I have my cycle 1 and 2 momentum going positive. See that histogram going over 0, cycle 1 and 2. So that was the bottom right there. That was a great indication of that turn. Then look what happens. Then I like to look at my moving average, tracking my indicators for tracking the trend, and you can see how it just started developing to the upside. This right here where you see the dots is what we call a volatility compression squeeze, where there's a consolidation period. And then what tends to happen, we either have a break to the upside or downside. That's where, again, I use my momentum. They're telling me the probability of this break is to the upside, not the downside. All right, so I go with that. Okay, you can see this, see the squeeze, and then see my momentum indicators below it. Now this is the monthly. Now I'll also be then looking at the weekly and the daily, but you can see that it's starting to turn up, right? So the probability is that this is going to break out of this compression squeeze to the upside. All right, and then sure enough, let's see what happens. So then it, boom, starts breaking. Okay, so that's where we are now. You can see we are currently getting a cycle reversal on the downside. So when I start seeing that that is alert to potential change in cycle. Okay, so keep that in mind, and we'll go from there. So you can see back past when we had those cycle reversals, we're right here. You can see the market basically stopped, right? So typically I might get one, but if I get three, like in this situation, usually after that third one, that's when it goes down. But you can see here, here's the cycle reversal. We had that, and again, remember this is the monthly. We had the market paused, and we had a reversion back to that moving average. Market pauses here, reversion back, pause, right? So be aware of that. We're getting these kind of alert signals. Okay, so we're going to tie all this together. So this is just one part of the calculus. Okay, so that's the monthly, but things are still strong. So, you're not looking to go, get aggressive short. The market trend is still up. So here's then the next one. I drop down. I'm at 30,000, 50,000 feet here, flying over. Now, kind of want to swoop down and see what's going on a little bit closer to the ground. So now I go to the long term, which is I refer to as the weekly time frame. And you can see here, we've been, this trend started right back here. See my arrows right here? We had a really great breakout. This was back on November 13th, 2023, that week. And look at that trend. It just tracked all the way, that 8 exponential, and then here's below it is the 21. And then we had the mean reversion, look here. We had a mean reversion right here. See the arrows? There's 1, 2, 3, that third one with momentum, mean reversion. But where did it stop? At that 21. So perfect tracking your trend. So it's kind of an automated trend line. So we had another one right here, tracks back to the automated trend line. And this was the Japanese, the yen debacle there. And so it looked like to me it was going to break more, but that swooped back up. And so now we're back at the top of the range. All right, so that's kind of where we are long term. And you can see momentum is shifted right back up. But we're starting to get kind of a little bit toppy. So I'm watching this for these kind of alerts. So we did get alert here. We had alert on the monthly. So we'll be watching that closely. And then you can see here, the daily is the medium term, which is what we use for our swing trade kind of time durations. And again, we had a cycle reversal here. Now you can see back again when we had these cycle reversals, what happened. So here's one. Basically, the market didn't go anywhere. See, after that reversal right there, it just kind of went sideways. Here was a reversal there, and this one had momentum after it. Reversion back to that 8 exponential. Here, cycle reversal, back down. So the point is, when you start getting these reversal signals like that, the market doesn't usually have a whole lot of momentum left in it, but we'll see. So it's just in a grinding mode right now. And so then we had that momentum shift here. Look at the momentum shifting down. And then we had that bigger reversion, and then we had that big collapse and amazing bounce back right here. So that's what we're looking at. So, I'll be aware of that. Very big alert to potential cycle change. That doesn't mean that we're going to crash and burn tomorrow. But what we've got now setting up, we've got the seasonality to look at, and that's going to be an important part. So that's the next part of the equation. What is the seasonality? Is there any seasonality that we need to be aware of? All right. So that's the next thing I looked at. We'll look at. So here's a sector rotation. So you can also then see where the money's flowing. So that's a big part of your trading. you want to be able to follow the money, okay? So the money flow. And so you can see we've had a pretty strong, Friday was a pretty good reversion back up, or, rotation back into pretty much every sector but energy. And then you can see for the last month, we've had a really great rotation. Really the big area was consumer staples. That was kind of the safety trade, consumer staples and utilities have been a really great place to be for a number of different reasons. Utilities are kind of a safety haven play, but also with the AI and the energy consumption they're going to need, there's a lot of interest in buying up the utilities for that. So utilities have been great. And then you can see going here back 6 months, the big performer again has been utilities. And then you can see, real estate's gotten a really good pop from the, potential rates going lower, et cetera. So, always we'll follow the money, and then we can look within these sectors to see what stocks maybe are, performing that we want to jump into. Okay, so that's the next thing I'll look at. Now, with seasonality, it's very important because what this can do, we want the trend as our friend, right? So if we have any kind of edge at all, we're gonna grab onto it. And so sometimes seasonality can give you that additional trading edge. And so here are the current seasonals, how they're stacking up. And this kind of aligns what we just saw on the big picture. We started to see that alert to a potential cycle change. So the way I'm going to combine that with my view going forward is that we tend to get on the S&P, we tend to get a cycle high on the seasonals around September 1st through about September 11th. So we're currently right here where that red arrow is. And then you can see seasonally, when you get through the first two weeks of September are okay seasonally. They tend to be the stronger part. But once you get into that third, fourth week of September, then all of a sudden we can have a pretty good downshift or trend to the downside seasonally. And a lot of times, if you've probably been trading for a while, you'll know that October can be pretty wild, and sometimes we get the biggest move. So you can see here going into October, big swing down. So going to be aware of that. History doesn't always repeat, but it does rhyme, right? The old expression there. And then when we look here, we can see we're starting to get those cycle reversals alerts here on the daily, weekly, and monthly. So that's telling us something there as well. All right, so you put all this together, and then that helps you to formulate your trading plan. Okay, so that's what it looks like, on that, and then you get a potential for a big seasonal bump. The first 2 or 3 days in October, which can be a fantastic seasonal shift to the upside going into the fourth quarter. So here it is for the NASDAQ 100, pretty much the same, pretty much identical. So about the first right here to the 18th, you can see where it really doesn't do a whole lot, and then you get that shift down. So that's what we're going to be aware of this potential coming up, and I'm going to use my tools to help me navigate and guide me through this potential, shift in the trend market or whatever that is coming up. All right, so we're not looking to go aggressive short right now, but we're aware that things could shift. So it's kind of a stock-specific environment right now. So that's what it looks like. And then on the crude side, if you like to follow energy, which I do, so you can see we tend to get a seasonal low here around the 1st of September into the 15th. So this is one we'll see if this can maybe develop for the next 2 weeks, if we can find some seasonality to the energy. We've had a really good, supply of energy, no shortage of supply. The only thing that really has popped up the energy and made it kind of put a bid under it is the Middle East process or problems there. But overall, there's ample energy supply as far as crude, plus China's been pulling back. So we haven't had a very strong energy season so far, but seasonally we could get a little bit of a bump here going into that second part of the September, the first 2 weeks there. All right, so I'm always conscious of seasonality. I want to take a look at that. So whatever edge we get, we're going to grab it, right? And do the seasonals that changed in the election? Well, typically, election years are pretty strong. Now, as we get closer to, November, then, we can see a lot of volatility because, it's going to be a question of who wins, who gets in, what their policies are going to be. So that's when we get a lot of volatility. So we took a look at that. Then we took a look at the top-down market review. We just viewed that. All right, so that's kind of the things that I like to go through as far as that process. Now, the next thing is selecting the best swing trade setup. So what I like to do is base these swing trades that I select for the trades that I send out to my alert service. I'll look at a number of different things. So first off, I want to see is the cycle trend. Markets trade in cycles, right? They never go straight up, straight down, but they'll go sideways down to up. Now, currently we're in an uptrend, right? But maybe we're getting to the area where we might be watching for, maybe sideways price action, but currently we've been in that uptrend. So that's where we are, check that box. Now, what is the market condition? There's always going to be uncertainty in the market. And so right now we kind of have low uncertainty. Everything's kind of rolling the way of the Fed. We have the GDP comes out, it's okay. There's still economic growth. The labor market, we've been seeing a cooling on that, so that's cooled inflation, so that's been good. So the data points have been coming out pretty rosy so far. So kind of a lower uncertainty or in the market right now, but that can change so fast. But right now, kind of low market uncertainty conditions. Now, the next thing I always want to be aware of, what is this, whatever stock or security we're going to trade, what is its relative strength, or what is the momentum of that security? And this is how we can form and give us a forecast of potential direction. So I want to look at it, okay, what does my cycle trend tell me? Are we up, down, sideways? I want to kind of, evaluate that, formulate what the condition is there. Second, what kind of market uncertainty are we in? Are we high, extreme, or low? And then that'll tell me how to adjust for risk of the trades, or maybe what option strategies to look at the most. And then the next thing is to follow the momentum. I'm always telling my members, let's follow momentum. So that's going to tell us the potential direction of whatever we're looking at to trade. Now, so then the next thing I look at is I really like to look at patterns of chart patterns, okay? So that can tell us a whole lot. So I've kind of identified and put together 5 very selective, what I call high winning probability chart patterns that I like to follow. And so by defining these patterns, then I can kind of look quickly and kind of decide, okay, this looks like a good setup for a long or short. And then it'll also give me a good idea of then what option strategy to use based on that pattern. And then the next thing is your time horizon, the trade duration. So some trades, you may want to be in just because the volatilities or uncertainty is getting extreme. You may want to shorten up that duration time frame to make it shorter for less risk. Or if you're in a lower, kind of market uncertainty, then you're willing to take on a little bit longer duration for your trades to work out. So these are all things that kind of go into the process, or the equation or the calculus of your trade setups and what you're going to do. All right, so that's the next thing. So that's step 1 through 5. So that's step 1 through 5, identify market cycle, market condition, validate stocks relative strength, and your time horizon. First, 5 steps. So currently, we're in an uptrend. And then as far as tracking trend, I like to use 4 primary moving averages that help me to identify and track trend and to define areas of areas of support resistance. So the time frames that I look at will be always, I'm looking at the 8-period exponential, which is a faster weighted moving average, and the 21. So those are 2 exponential. And then I follow the 50 simple, which is kind of my trend track. And then the 200 is a really important one for the bigger picture, right? So the 8 to 21 and the 50 and the 200 are kind of 4 key moving averages that I combine and use in all my trading selection process that I use. All right, so what is the current market condition? Well, it can be extreme, high, or low. So right now we're kind of low. What creates extreme? Well, war, economic crisis, the pandemic, things like that. Now we do have this week, next Friday, we have the non-farm payroll, and that can be a real kind of game changer. That's what I call a potential catalyst event. So, we'll be aware of that. That's coming in next Friday. So that's one thing that could shift and create the market to either, move higher to the next trend up or break the market down. So this will be a kind of a key number that we'll be aware of to watch. Okay, so the non-farm payroll. And then we have the Fed, on the 18th. So, but the first thing, we've got that non-farm payroll this next Friday. So that'll be a key one to be watching. Now, the next thing, and one of the most important things that I follow is momentum. So like I said, follow momentum is what I'm constantly saying in the trade room. So let's follow the momentum and get an idea of potentially where this stock or security may go. So when you're trading in any kind of market environment, it really all comes down to you got to get the price direction, timing, right? You have to have good timing in and out of a trade. And then the third thing is managing your risk. So the best trading tool then that I found for signaling price direction and market timing is a tool that I developed and use, and it's based on momentum flows. So these momentum indicators, what they do is they measure price strength or weakness. And when you take measurements of that strength or weakness across multiple time frames, it really creates a dynamic trend following indicator that will help you to identify new price trends, cycle changes earlier than the herd, validate the strength or weakness of that shift in trend, right, or cycle. And then based on the strength or weakness, this will help you to maximize your trade in that trend to maximize your profit. So if you've got a really strong validation of great momentum across multiple time frames, then you're going to be more confident staying with that trade for a longer period of time, being able to really maximize your profit. So momentum is a really key main indicator that I like to use for direction and then for timing. So let's take the next thing we'll do is we'll look at the chart patterns that I like to follow. So I've broken these down and I put these in a category of 5 different kind of types of patterns that I like to look for. So the categories, is the volatility squeeze breakout. So that's kind of the main pattern. If I see that can show up, this squeeze consolidation pattern can show up in any of these other 4. So then I look at, are we in a pattern? Is this a cycle high reversal, cycle low reversal? So cycle high reversal is where you're basically above all the moving averages and you're turning over. Cycle low reversal is when you're below all the moving averages and turning over. Or then I might be looking at a cycle low retracement where we're coming into major moving average and retracing off that, or cycle high retracement bouncing off a major overhead resistance. So these are kind of the 4 typical patterns. And then if I see a squeeze within these patterns, that's where I'll really focus on that specific security stock or whatever it might be. So then it really helps you in that selection process of picking the best trade. So let's take a look. What is a volatility compression squeeze? So this pattern is identified as a period of price consolidation where the price is just kind of coiling in a really tight pattern and then has an explosive momentum breakout that's going to be either up or down out of that churning pattern. Now, when we have a security that has multiple time frames in this kind of volatility squeeze, the breakouts then can be even more powerful and greater with greater fall through, kind of like a chain reaction explosion, or kind of what I kind of term like lightning in a bottle. If we could just ball it up and do it every time, that would be the one we do. So this chain reaction, then what happens, you could have a lower time frame. It could be a 30-minute, whatever, that has a squeeze that triggers a 60-minute, 60 triggers a daily. That could go all the way to kind of like a tsunami, right? So that could really shift the trend. So that's how the volatility squeeze can be really a great friend, especially when you're in a more uncertain market. So, the quicker you're in and out of trades, the less risk. So that's what a volatility squeeze pattern really helps in that kind of, a more uncertainty type environment. So this type of setup is fantastic for your swing trades. And it's great for day trades as well. And what it's gonna do is it offers you that really good timing edge. And remember, in trading, time equals risk. So the quicker we can get in and out of the trade, the less risk we're gonna have. So here's a really good example of a volatility squeeze. And this was on Netflix. This is so clear. You can see my indicators will show these dots. You can see right here, see these dots right there. So magenta, I've got it coded here. So when momentum is negative, you're going to get a kind of a purple dot. When momentum's positive, you'll get a green. But I've got it programmed into my indicators, and this signals when we start a squeeze. So it starts churning. So when I start seeing these dots, that's an indication based on the coding in the system that we're in the squeeze. Now, typically what happens, we'll either break the upside or downside of that squeeze, right? So then I'm looking at what is the upside resistance, what is the downside support. And when we start breaking that's what I call the trigger price. But momentum is going to give us our momentum trigger. So right here, you can see in this example with Netflix, the momentum went positive, right? We had a cycle reversal, then momentum starts building. So potential, my direction, I'm going to say, well, there's a higher probability. This is probably going to break to the upside, which it did. So it broke out of the squeeze to the upside. Then it starts to consolidate, cools off. See the momentum starts coming down. It reverts back to these moving averages. Then we get another volatility squeeze here. See the dots? Now momentum then shifts up. Tells us again, potential probability to the upside. Cycle reversal, momentum shift, upside we go. And then it starts cooling off. See the momentum starts to shift, market cools off. Then we get another volatility squeeze right here. Momentum shifting up, cycle reversal up, momentum, another breakout. All right, so that's kind of a great pattern that I love to look for. And it's so useful for any of your trades. But then I will match it to certain option trades. So I might do a volatility squeeze is great for debit spreads, long condors, or even a counter diagonal. So then I'll match it up with the appropriate option strategy that would kind of benefit from that pattern. All right, here's a really good example. This was on Skyworks. It had a 4-hour squeeze with the daily, and you can see how powerful this breakout was. See the squeeze here, the dots? So it had that consolidation on the 4-hour, then it broke, right? Look at the momentum, cycle reversal momentum, and here it is on the daily. Look at that consolidation phase through there, just churning, all right? And then we had momentum, we had a cycle reversal, momentum shift. We knew it was coming. It's not going to stay here and squeeze forever. So, but the probable direction was to the upside. I had my momentum reversal arrow right here. Boom, blew to the upside. Great trade setup that we had on that one. Now, before we go any further though, because I know a lot of you may be taking off for a football game or having something else you might need to do today, but I'm going to be doing this very special, I guess I'll call it my summer ending special, but I'm going to be offering out my alert service at a 20% off discount, which I haven't done in probably over a year. All right, so if you'd like to jump in, and also I'm going to extend it for 6 months. Typically, when my alerts, I only put them out for maybe a month to maybe 4 months is kind of what I've been offering. But kind of this is going to be a special one here today. So what you're going to get if you use this powercycletrading.com/special, let me give you the link, and you can plug it in, and then you can see what the offer will be, and you're going to get 20% off. So use this special link, and I'll go through this quickly, and then we'll get back on track. But I wanted to put this out there in case you do have to take off for this special offer. Okay, so just click on that. You could click it or copy it and paste it. So you click on that, and it should pull up this drop down here. Here it comes. Okay, so what you're going to see here is this lead open and close text alert service offer. So if you put in then small cap, pull that up, and then put in alert 20, you're going to get 20% off. All right, so do that today. You've got a few hours left, but sign up right now if you can. I'd appreciate that. And then if you have later when we have a recording, that'll come out. But right now, here's kind of a summary of the alerts. So if you've been looking for more help and guidance than in your trading, this is a great package for you. So what you're going to get is my 5 trading alerts. Okay, I have 5 different kind of trades setup alerts that I send out, but you're going to get this for the next 6 months plus 6 months to my trading club. So here's kind of a summary review of what we've done starting back in May of 2018 through Friday. So we've had this has been running about a 79-80% win rate, which is pretty darn good. And so these are unaudited, but this is a summary. So this is a total of the 5 different services totaling together. So we've had 770 trades closed out, 555 winners, 55 break even, 164 losers. So running at 79% winning rate of these trades, okay? Now, what you're gonna get for the next 6 months, and you can stop and start this alert service whenever you want. So if you do holiday or business, whatever, you can stop it. You're not gonna mess up your time. So I send out selective trades that could be a calendar, counter diagonals. We probably do most of the trades with these. We do then a lot of butterfly long condors, so that's another kind of selected trades I send out, then breakout reversal trades, and then we do what we call these kind of monthly butterfly pinning trades where we use a butterfly or a calendar, and then we have selective earnings trades. So there are 5 different types of trades that you might receive. And so you're going to get then all 5 of these for the next 6 months. So typically it'll be 8 to 12 stocks or ETFs a month. And I'll send out the text alert, or you can have it by email or both. I'll give you the, where to get in, where to get out. I'm constantly updating with, if we have any adjustments that we need to do, and I'll give you the option strategy to use. Now, a lot of the members just want the trades and they do their own thing. They just buy the stock or, whatever they are. But when I send out the alert, I'll always give you an option strategy to go along with it if you want to use it. So you'll get the trade entry levels, profit target levels, what option series to use, stop loss level, and then I'm constantly up, watching and monitoring throughout the day. So if there's anything that you need to be aware of, so you don't have to stare at your screen all day, I'll send it out by text. Okay, and then I do an aftermarket video. If we set one up, so you'll see the review of why I set the trade up, and I'll go through the technicals of it, the chart pattern, et cetera, based on Fibonacci. And then you're going to also then get membership to my Power Cycle Trading Club for the next 6 months as well. And what this gives you is my virtual trading room. So you get access to that each and every day during the week, and that's open from 9:30 Eastern to 10:30. So you come in, look at whatever trades we're looking to set up, or if you have any questions on one of your trades or need help on a trade, you can come in and ask whatever questions you have there. And then I'll do a daily video newsletter after the close. We do video, these are archived, and I do a weekly Q&A live and recorded every week that you have access to. Trader educational stuff in the vault, and then anything on my website, you'll get a 60% discount as a membership member. So currently this is $690 for 6 months. So that comes out to about $115 a month, which is pretty cheap. But today you're going to get it for $552. If you put in that alert 20, that's going to give you 20% off. So just come down here and do small cap alert, then 20, and then you can add, there's a 2 pay if you want it, or just 1 pay, and then you hit apply, and that's going to give you that for the next 6 months, $552. That's $92 a month. That comes out to like $3.06 a day. That's pretty darn good. And there's 2 pay if you want it. Plus, if you want to add my indicators that I kind of briefly went over, you can add that to it as well. Just click on that, and you're going to get 20% off of all that. And you can do 2 pay if you'd like. So that's kind of wanted to put that out there to make sure that you take advantage of this offer before it's gone. And you're going to get all that for basically $552 or $92 a month or $3.06 a day. Yeah, I've got the Power Cycle, the indicators for TradingView, the core indicators. Okay, so I do have those for TradingView. Question: what are your stop loss rules on option trades, either premium received or debit paid? Yeah, so a combination of that, combination of your premium debit paid, and also also certain chart points based on either moving average support resistance or what we call option activity or price action support resistance, things like that. I look at kind of 5 different things. I call it price target mapping. So, but the option premium is part of it. Hey there, Shamish. Hold on, let me see what your question is real quick. Okay. Yeah, if you have still, yeah, this would be added on. So if you still have time and your alert service and you don't want to get extra, which is a great idea, you get 20% off. This will just be added to what you currently have. Okay, that'll be added to it. So you won't lose anything, you'll just be adding, and you'll be adding at a 20% discount. Okay. The indicators, yeah, all my indicators are based off Thinkorswim. So every indicator I have is Thinkorswim. Okay, so that's my platform I use. And so everything that I've developed was first developed on Thinkorswim, and then I would make it for either maybe TradeStation, eSignal, TradingView, Wealth Charts, NinjaTrader, things like that. But Thinkorswim is the main one. Okay, so we'll come back to this, but I wanted to make sure I got that out there to you. So use this special link here, and that'll make it pretty easy for you. And then make sure to use that small cap alert 20, and you're going to get that 20% off. Okay, so pretty good deal, I think. All right, so that's what I want to show you. Now, here's the cycle low. Yeah, if you buy the indicators, and we have it pretty, we have a PDF and video, but if you do need help, yeah, we can help you with the indicators. Do not have the indicators for bar chart, but TradingView. With that one, Ann, I'll just, I'll teach you how to set that one up. Okay, if you just ask me in the trade room if you have any questions on that. All right, so here's the other patterns that I like to look for: cycle low reversal. So here's where the market, has been sold off really hard. In this example, here's SPY, really hard selling off. These are my extreme range bands that also come with the tools. So if you do buy my indicators, if you sign up today at 195, and add that to your cart, you're going to get these indicators. So part of the indicator package will be this extreme range bands. All right, so you can see it just really came down hard. Then we had a cycle reversal, and then momentum starts to shift. Cycle 1 and 2 shifts here. We get that momentum reversal, cycle low reversal below all the key moving averages, and turns that corner and moves back up. All right, so here's the cycle low retracement reversal. So this is another really great pattern I like to look for. And so this one is where we have a market that pulls back to a key moving average and holds that support and reverses back up. So here's an example like on gold, and this was the weekly, and over here is your daily time frame. So you can see we had a 200-week moving average there and a 200-day, which is a huge moving average. So you can see it came down here, and look at it, just consolidated for weeks, and then finally turned up. See the volatility squeeze there? Momentum shifts, and boom, upside we go. Here had a volatility squeeze as well on the weekly, cycle low reversal off that with the squeeze. So that's one of my favorite pattern setups that we can find. Here's a cycle high reversal. And again, these are great for, debit spreads. We might be a put debit spread, or we might decide to do a butterfly or condor or calendar. And then here's the cycle high reversal, okay? So here's where we're above all the moving averages. We're kind of like we are now. We start getting cycle reversal, momentum starts shifting down, and then we have that mean reversion, right? So we're starting to get a little bit of that activity, that action right now. Just if you look at SPX, right, or SPY, so be aware of what we're seeing. See that? So look at that, 1, 2, down she goes. Anyway, be aware. Okay, so that's a cycle high reversal, and here's a cycle high retracement reversal moving into a key moving average. This is like on the XLK, the ETF, had this huge 200-day moving average sitting up here, which is major resistance. And so if you see something like that, the first time up into a 200-day or weekly, man, it's typically 99% of the time it's not going to break through that first time. So here it goes up and pretty much fails, right? So we had 1, 2, 3 cycle reversals, alerts, and then we started getting momentum. Look at that, down she goes. Now, the next thing is, finding the trades. I mean, you can take, I used to look, at night hours looking for these trade setups, just combing through charts, But what I've done to, alleviate that and speed it up is I've put together two different types of scans that I look for. So that I have a trade scanning process, and this helps me to find and spot these kind of breakout reversal trades to get into before the herd. So a couple of different ones, but one that I really like is what I call my momentum-based kind of reversal scan. And so I just ran this one actually this morning, and came up with, these are for momentum breaks for potential momentum reversals to the upside. So came up with a few here today. Amazon, this actually looks pretty good. We'll take a look at that. And also Chevron kind of looks pretty interesting. That also kind of aligns with the energy. Maybe we get some seasonality, but you can see here, these popped up: Amazon, Alibaba, BAL, CHK, Phillips, WDC. So it can, go through these and find some selective trade setups. So I don't have to come through everything. So that's one thing that I use. So that's what I call my momentum reversal scanner. And then my other scan that I like to run is my volatility squeeze scan. And so this was run this morning, and I came up with, here's CSX. This looks actually pretty good, the CSX. If we had time, we'll look at that. This is in a squeeze. It's been in a squeeze for 13, that's the squeeze daily, 13 days. And then it's also been in a squeeze for, on the 4 hour for 13 4-hour bars. So this one looks actually pretty interesting. If we have time, I'll go back to CSX and I'll go to Amazon and show you what those look like. So that came up on a volatility squeeze. Actually, also Google is showing it's in a squeeze. Chevron, CVX. So these are a few. If we have time, I can go back and kind of go through those with you. All right, so this is where I'll find most of my trades. Okay. And then I go through the process of evaluating what I see based on the charts, based on momentum. Okay, so step 10 through 13, trade setup, then what option strategy to use, and then managing the trade. So this is where, I want to show you the elite service, alert service trades. So these are trades that I've sent out to alert members. And so it's a service that just gave you the potential. If you want to jump into this service, then use that special link there in alert 20, but these are the alert trades, okay? So to show you how accurate these have been. So the goal of trading is to have, more winning trades than losing trades, since it's all going to be impossible to have all winning trades. Now you could say, okay, well, I could still have a winning portfolio with losing trades, but your, winners outpace your loser, right? But yeah, great, but yeah. Enjoy the volatility squeeze and your equity drawdown on those. Have fun on that, right? So the reality, though, in mine is that the performance to date of the trade setups which have been sent out through this service have really been very remarkable, actually, as you're going to see. So currently, with all the trades that we've done since starting, the first alert that I sent out was back in May of 2018. So these are breakout kind of reversal trades. All right, but then since then I've added, the calendars, counter diagonal alert service part, butterfly condors have been added, and then these binary butterflies for pinning, and then also what we've added is the specific earnings type trades. Okay, so but all these combined, we've had 770 trades, 555 have been winners, 55 break even, 164 losers. So we're running about 79%. We were up to 80, 81%. And, we have a few, you're not going to have all winners, right? But we're still running at a really high rate. Now, again, these are unaudited, just a summary of the trades, just win, loss, break even is the way that I summarize it and break it down. Just kind of keep it simple, okay? Now, what did I do there? Try to get rid of this pen. All right, got it. Okay, now with the alert service, I use a free app. It's called Telegram. It's a really great app, And this just shows you kind of, what it will look like. And these go out within seconds of, when I send the trade out. So you'll get the login for that, and you can just, we'll use that. And if you do want it by email, we can send it to you for that as well. But this will send the trades out super, super fast. And it looks exactly like this is what it looks like. So here's one. Here's from August 29th, Thursday. We did a trade on CVS. So this was a retracement failure short. Okay. So you can see how defined this is. So it said trading around 56.70. It had a 4-hour negative momentum and a daily negative momentum on cycle 1. We had a 513 downside cross. So put in the targets areas, and we did this with what we call a diagonal, okay, counter diagonal. So it goes through the trade, what that was. It's long the 20 September, short the 30 August, 56.55. We adjusted this on Friday. All right, so then we also did a new trade on Honeywell. We did a long trade on Honeywell, and we did that using a condor, so you can see that. And then here's an update on yesterday, CVS. We did an adjustment on that. And then we did actually, right at the end of the day, I sent out a short trade on CRM. So this is a retracement failure short, so we'll see how that does using a put condor. So that's what that looks like, as far as using the Telegram. And this goes out super fast, and it's a free app. You don't have to pay anything for it. The promo code Ann is alert20, small cap, alert 20, right there, small cap. Okay. So we use Telegram. So here's going through the butterfly condor. So started this part of the service. So this alert service is made up of 5 different alerts that you can get, different types of alerts. So here's the butterfly alerts, okay? So these are either butterflies or what we call long condors, which could be for upside or downside moves. Started this back in May of 2019, and through yesterday, we've had 181 trades closed out, 127 winners, 13 break even, 41 losers, run about 77%. Now, these will be the lowest risk trades of all the different alerts I send out. These will be the lowest amount of potential risk, okay? So, on average, maybe $75 per spread may be your average potential risk. But the potential for your profit is 2 to 1. We've even had trades where we made 20 to 1, which I'll show you. You could even make 25 to 1. So you risk $1, you can make 25, okay? So these butterflies, condors can be highly, highly leveraged on very super low risk. So that's kind of a summary there. Again, unaudited. And then here's a couple for you to look at. So here's Oracle. We did this not too long ago. This was done, set this up on the 16th of August. Oracle was trading at 137.50. And then we took it off on the 22nd. Now we have different profit. I'll send out alerts. If you have multiple contracts, maybe take a little bit to what I call give yourself that lock you into an edge. And then I'll monitor, all the way through. So here was a profit take on the 22nd. So again, here you can see the trade setup is very defined. It says new Oracle long. It was trading at 137.15. Now, again, some members they just want the trade. They'll do their own thing. So that was where we were getting in, and it was starting to break out. And so then I kind of explained what it was that I was looking at, et cetera, et cetera. And then so said here to buy a condor, which is we bought the 137, 140, 142, 145. This is what we call a call condor. Okay, so it looks like something like that. All right, and so I said do this around 90 cents. Okay, so it's not going to be perfect. Sometimes you might get a little bit less. Sometimes it might be a little bit more. And then you can see on the 22nd, I may have had some other alerts that I sent out. I'm always constantly telling you where it is, et cetera. But here on the 22nd, said Oracle long trading now 140.52. If long, the 23 August, this condor currently up $140 per spread or 155% return on your capital at risk. So make sure that you take some profit. And then I sent out this one, say take profit on any long balance before today's close. So I'm constantly guiding you, but obviously you can do your own thing, which a lot of members do. Okay, but I try to give you as much detail as I can. So here's the trade setup, again, based on my trading model. And again, if you want to buy the indicators, you can as that upsell on this. So here's the first thing. Here's your alert to potential change in cycle. See that arrow? All right, that's the alert, not the trigger. And then we start getting positive momentum, cycle 1, 2, okay? And then I have a momentum cross right here, that orange. So typically that's where then I like to get in right in here. So then we had a break above that 50% retracement. So we got in right there, got out right there, okay? So went in 137.50, 140.50 right here. And we did this with what we call a call condor. So we had, this was, we bought the, and we did this all together. Sometimes we might leg it, but we did this all at once. So this was long the 137 call, short the 140, so right here. And then short the 142, 145 right here. Okay, we did this for total risk, $90 debit, right there, 90 cents, 90 bucks. So then our potential, that's our max risk, 90 bucks. Now, then we have stop loss rules, et cetera. But you know, if you didn't do anything, your risk is 90 bucks. Your spread potential profit, it's a $3 wide spread, right? 137, 140, 142, 145, that's $3 or $300 less your cost risk. So this has potential, if it goes out here, to make $210 per spread, 233%. That's one spread. If you do 10, you can get the idea. You could do 1,000, you know, whatever. But I do, these are all based on just the stats are based on per trade, one contract. Now here's where it went out. We sent out that alert, take profit. Okay, so right here on the 22nd, sent that out. It was trading at 140.52 right there on the 22nd. And here's the condor right there. So it was trading right there, that purple line. So still had some pretty good profit in there if you stayed with it. If it stayed in there, you could have made the max. But at this point, the spread went from 90 cents to 233. That should be 233. All right, so have to change that. So this was up $143 on that risk of 90. So it went out making 158% return on your risk of 90. Now here's one that we did. This was a short trade. This was on ConocoPhillips. So this was back on July the 22nd. It was trading at 112.35, and we took profit on the 24th when it was trading at 110.70, and also then the next profit take on the 26th when it was trading at 110.31. So here's the trade setup. You can see what it looked like. You know, when we set this up, it was trading at 112.35. Sent this out, set a momentum short based on a break and close today below its prior week's low, 112.99, target 1, target 2. So this was doing a put condor. So the 112, 110, 109, 107 at around 48 cents. So then profit take the 24th, profit take the 26th. It was up on the 26th, it was up $100 per spread or 208% return. The promo code, you get this for 6 months. And this, if you click here, let's go back here one more time. Let me show you some questions on this. So here's what you're going to get. 1 second. Just to clarify it, make sure everybody understands. So if you sign up here now and use Alert 20 small cap, okay, come down here. This is for 6 months. Come over here, click on Buy Now. So it says here 6 months, right? So you're going to get 6 months of the alert, 6 months of the trading club, 6 full months. You can stop and start whenever you want, so you don't have to use your time. Just click on that and then put in, put in Alert 20 right here. And if you want the indicators, you can add those, down here. But anyway, hit that, and then it'll give you, this knockoff. So this was including that, but you can remove that. All right, so then put that in alert. So it's $6.90 without the. That's still a great deal. That's $115 a month. But if you put Alert 20, you're going to get this for, what is that, $92 a month, basically $552. Okay, and that's for 6 months. Okay, does that clarify things? Yeah, this is Telegram. haven't had any problems with it. I saw that story about the guy. It's a great service. Telegram is fantastic. I love it. I use it for, personal stuff, chatting with people. I like it better than I like it better than I like it better than the text services we use, and better than the Facebook text chat. It's really good. Well, you can use it or not use it, but I don't use it to send out any messages. I just use it to send out the alerts. So, don't use it for anything else, but it's a great, I'm telling you, it's a great service. I highly recommend it. Okay. Does that answer your question, Teresa? Talking about, yeah, I've seen the articles, whatever, but we just use it for the alerts. One more second here. Yeah, if you already have some time on your alert service, this will just add you another 6 months, Rich. Yeah, so you just get another 6, and again, you don't have to, you won't use your time unless you're using it. So you can stop and start it, so you're not going to use up the time. Yeah, Telegram is what I use to send out the alerts, okay? So any other questions on that? Of all the paid training, which are the best to prepare me for starting with the power? Well, the best thing that actually, John, is just come into the trading room, or I've got multiple courses too that you can take. So the other thing, just not get too far off track here, but I've got a directional trading course that would probably be a great one for you to jump into to use. And you remember, you'll have a member's discount, so of 60% off, right? So if you want to go to my website, Power Cycle Trading, and you want to buy anything, that once you're a member, you'll get your members discount code, and you can buy any of my indicators, my scanners, anything that I have. You can buy it, but you'll get it for 60% off. So if you wanted to, I would probably recommend starting out, maybe get my directional trading course, which would be right here under boot camps and coaching. Here's a sharpen your trading with seasonal trends spreads. Here's a seasonality course, trade breakouts and reversals. This is a really good one. This is probably, I highly recommend this. This is teaches you my directional trading process. And and you can get the indicators with it if you want. So if you come over here and you just want to get the course, it's $397. Click buy now. Now, as a member, you'll get your members discount code. You just put that in the promo code. It'll knock 60% off of this price on anything on my website. Okay, so I'm just high option, tons of option courses, because that's kind of the thing I like to use. So you can see we're option-wise, Ultimate Option Guide course, fantastic course on all the different option spreads. Here's one that I just did, Synthetic Covered Call Option Workshop. This is really great, cool course. Trading cycles and breakouts with weekly options, technical trading, selling options for income, profits, and hedging. Calendar course, we use tons of calendars. My earnings workshop, butterfly condor course, just completed this. So you can come in there. This is a great course, butterflies, etc. Come in here, and it's $397 with your 60% discount. You can see you're going to save a lot of money. All right, so use that, take advantage of it. So here's the Conoco. So this was a short trade. It was traded at 112.35. We're looking for a downside move. We put this trade on for about $48. So I'll kind of go through here. So here was the trade setup. Using my indicators, I found this trade with the scanner. Okay, so we had a reversal here. See that right there? And then we had momentum start to shift, reversal. So we did this, went short right here. on the 22nd, straight at 112.35 right in there. And then it just kind of grinded down here. We got out right there. And I'm constantly updating you all through the trade. So this was one we did with a put condor. So this one we bought the 112, 110 put. And the course that would teach you this, John, would be that course, Butterfly and Condors, which I think was $397. But with your members discount, you know, that's going to be, you can get that for $397 less your 60% discount. So I think that's going to be like, you can get this course for about $159. So great course. I'm just giving this stuff away. It's too cheap. But I want to try to help and make you, make you a better trader. Thank you there, Rich. Let me include that. Here's nice compliment back from Rich. Appreciate it. I think you took the butterfly course, didn't you, Rich? Just recently. Yeah, here's the order form again, Ann. Let me pull that up for you. Let me get you that order form 1 second. Hold on. Okay, you can put in paracycletrading.com/special, or just click on this link here. Okay, so use that link there, paracycletrading.com/special. Click on it or copy it and paste it in, and that will pull it up. You can see the special link there right here. The URL link right there. paracycletrading.com/special, and then put in alert 20 small cap, and that will give you that 20% off. Okay. There. So let me get rid of that. Okay. Any more questions? Let me know. Yeah, so Jill, so question is, I missed, how do we get the 60% off? Okay, so once you're a member, okay, once you're a member, so if you buy this course today or whatever, or if you buy the alert service today, part of what you get is membership to my trading club. All right, so you can see here, you'll get, all 5 of the alert services for 6 months, and then you get membership to my trading club. Right here, you'll get membership to the Paracycle Trading Club for 6 months. And again, you can start and stop, if you go on vacation, but with the trading club, that's part of this package. Okay, you get all the alerts, but then also you get my trading club as part of it for 6 months. And so with the trading club, you'll have access to my virtual trading room, which is open every day from 9:30 Eastern to 10:30. So you come in there if you have any trade questions on any of your trades that you're doing, or want to see what we're looking at, each day, that's where we'll do it. Then I do a daily video update every day, to tell you kind of what my view is of the market, what we're looking at. We do a weekly live Q&A that's also recorded, but here's the other benefit. You get the 60% discounts on all courses and anything trading software on my site. Now, once you sign up, you'll get an email that'll give you the member discount code. Okay, so it'll give you the promo code, and you just keep that, and just any course you want to buy, you just put that promo code into the link before you buy it, and then it'll discount it by 60%. Okay, so it's real easy to use. Okay, so here's ConocoPhillips. So we did this as a put condor, 48 bucks risk. And so the potential here was a $2 widespread. So we had potential to make $152, 316%. So I always look at the risk first. I want low risk, and then, then look at the reward. But you can do it any way you want, Some people like to have more risk. I always look at the low risk because I want the trades that I send out to be low risk. And then if you want them higher risk, you can adjust the spreads. And I'll teach you that, in all my courses or in the trade room. So here's where that one went out. This one went out, ended up taking profit here on the 26th, trading right there. This Condor, put Condor is what it's called. 48 bucks of risk. The spread went to $154, less your cost of the trade, $106. That's a huge return, 220% return, right? Really nothing to sneeze at. Low risk, high return. Here's one more, Google. I'll just kind of flip through this. This one we set up as a Condor, $72 of risk, max risk, potential max profit, 178. So here's the trade setup again, using my same indicators, always the same, over and over and over and over. Nothing changes. I try to be very consistent. Cycle reversal, momentum, enter here, boom. Got in at 179.50, got out at 185, got out at 182.29. So this was also a Condor. So I matched the trade with what I think is the best option strategy again, but you can do whatever you want. But we've been doing a lot of Condors. So here was a Condor we did 180, 182.5, 185, 187.5, total risk 72 bucks, spread width 250, potential to make 178, 247% return. Went out right here, 182.29. This went from 72 bucks to 243, so this was up $171, 237% return. Now these are really fun, okay? This is another type of trade setup that I send out. And this is what we call our kind of a lotto trade or binary option trades. So this is a couple, two that we've done recently that were just pretty amazing. So here's Tesla. We did this long call butterfly. And this is what we call a pinning kind of binary lotto trade. So we did this one back on the 8th of February. Tesla's trade 189.35. We were looking for a move to 200, what we call a pin. All right, so this one actually made, this thing was up 1,925% return over 8 days later. So this was the trade setup, sent this out. New Tesla long binary monthly butterfly option pinning trade, trading at 189.35, set up for potential monthly expiration pin at 200 next Friday. Buy this butterfly for, look at this, $12. That's the risk, 12 bucks. Here it was on the 16th. So now to alert, at that point, it was up trading at $200. The butterfly was up $215 per spread, 1,791% at that time. Then it went out at the end of the day. I said, wow, almost a perfect pin. Actually, it was a perfect pin. It went out and pinned at 200. This was up $230, 1,916% return. Now we're scaling out, but this is the potential of what you get with these kind of setups. So here was this trade setup. Here was our target. Here was the butterfly. We did the 197.5, 200, 202.5 butterfly here. Look at the cost of the trade, 12 cents. That's $12. Okay, so that's the butterfly right here. 12 bucks. That's the max risk. Spread width was 250, 197, 200, 202, 200, so 250. Cost of the trade, 12 bucks. Potential to make $238, the 1,983% return. So those are real potential returns that you can get. So somebody might say you're a liar, but these are actually, you can do these types of trades. So here's where it went out. This was amazing. I've rarely ever seen this happen, but this is one that did happen there. So we got in on the 8th, 189.35. We were looking for the target 200, and it pinned at 200, up 238%, $30, 1,983% return. And then here's one we did just recently. This was one we did on GLD about last week. So here was a GLD gold pin. Okay, so this is one we set up for the August monthly expiration, and GLD was trading at 222.85. And we did, with this one, we started out looking for 225, then we adjusted it up to 230. So I won't go through all of it too much here, but here's the first part of it. We set this up targeting 225, and then it looked like it was going to run through it, so we adjusted it up. So what we ended up doing was we ended up doing it for the 230 to pin it to $230. This I need to change that. That should be 230. Let me make note to change that. Change slide. Anyway, so let me run through. So here it's on the 16th, and we had adjusted this up to the 230 butterfly right there. Okay, so this was currently, then at that point it was up $150 per spread, 517%, and then it was towards the end of the day I sent out another alert, said trading at 230. There was our pin. So at that point it was up $200, 689% return. So this was GLD, the gold ETF. All right, so here was the trade that set up on that day. Here was the expiration right there. So this went up, it was up 231 per spread, 1,000. That's wrong too. I've got to change these slides on that. Sorry about that. So here was the trade that we adjusted up, and we had this then the 227 targeting 230, 233. There's your butterfly, okay? $3 wide, $300 less our adjusted price. We originally started out targeting 225, adjusted up. We had a cost of 29 cents or 29 bucks, potential to make 271. So 934% return potential. And we got out, it was trading right here. And at that point, it was trading right there at 230.47. So this went from 29 cents, 29 bucks to 232. So this was up $203 per spread. That's a 700% return. Those are really fun. So you might get something like that. And then here we do a lot of these calendars. You can see probably the most, well, actually the most trades that we tend to usually do, calendars and then butterflies. So in this one, we've had 294 trades closed out, 215 winners, 16 break even, 63 losers, running at 79% win rate. And here are a couple of those we've done recently on calendars, okay? So here's one we just recently completed. This was on Honeywell. Set this one up on the 23rd, and it was trading at 202.20. And then we took profit on the 27th. It was trading at 206.01. So at that point, it was up $110 per spread, 66% return. So this is, we do a lot of these. There's a certain reason we do it. I won't go into all the details today because this is a great spread strategy, but we do a lot of these, and I've got a great course on it if you want it on the website, so you can get that for 6% discount, or come to the trade room, and we're constantly doing these, usually every day. So here's where it was on the alert sent out. Said cycle low retracement reversal off the 200, positive momentum, daily volatility squeeze. So we did this with the calendar diagonal along the 6th September, short the 30 August. 202.5, 205 dollars. I said around $1.75, and then here it was on the 27th. It was trading at up about $100 per spread, 60% return on that. Okay, so these sometimes we're chipping away, sometimes we hit a home run, So here's the trade setup again. Just look, everything's the same. Everything's the same. Cycle reversal right there. Alert to potential change in cycle. Then look, see it just goes sideways. Then we start getting our momentum. Get my momentum cross here. We get in, boom, there, boom. So we got out. And this one, we keep tight trade discipline on the trade. Sometimes we'll let it run. Sometimes we get out a little bit sooner. Okay, so this one was going out right there on the 27th. So took it off right there. So the spread went from 165 to 275. So up $110 on your risk of 165, 66% return. Okay, so that was from the 23rd to the 27th. So these are, fairly short duration type, what we call swing trades that are typically that we're sending out. And then here's another one. This was a really nice one. This was on Boston Scientific. So here's one we set up on the 14th of August, trade at 76.20. At profit take on the 19th, 20th, 22nd. So I won't go through all this, but here's all the details of that trade when it was sent out. Again, same setup. Not just, cycle reversal, boom, momentum reversal. Got in here on this break of this area here. Now this one is still moving. This one we got out right here. It went sideways and now it had another break. That was a beautiful trade. Found this with the scanner. Again, this was with the scanner. So we did a couple adjustments, and so this was what we'll do is I'll, when I do adjustment, I'll say, okay, take some profit and then make the adjustment if you, have multiple contracts to do it. So this is one of the adjustments that we had, and so at that point we had adjusted this to the 30 August long 76 call short. Now the 23 August. Got to change that. I don't know how that got in there. So anyway, this was then on the 19th is trading at 87.68. So the spread went from 135 to 238. So we took profit, $103 per spread, 76% return. Still had the trade on. So then let the trade run, and then we adjusted it to a long call condor. So we adjusted this into the condor. So into the 30 August. Now, these are great trades because when we set these up, the part of the trade is we've got the long part of this was out 30 August. Then we started in closer in with the calendars, but then we can end up, not to get you confused, into that 30 August series. And this one we ended up converting it to a condor, 76, 78.5, 79.5, 82 call condor. So basically you're long the call here, short the call, long the call, adjusted it to this type of trade. So we adjusted, look at our trade costs. After taking profit, we were able to adjust this down to $60 debit. Okay, the spread blew to 178 when we got out right there. So this was up $118 on that risk of 60, 196% return. So these are sent out, these adjustments are sent out, so you can follow along if you want. So here's just an example. Or you can do your own thing. So here is the adjustment. See the 19th here, right here on the 19th, it says, if long the 30 August 76, short the 23.78.5, we're going to adjust it. So make sure to take some profit. Now we're going to adjust this up to where we're going to be long still the 30 August 76, but we're going to push the short strike spread up to the 79.5. Okay, and then we did another adjustment here where we adjusted this into a call condor right here, adjusted that to the call condor. So, these are all very descriptive when I send them out. And then if you have any questions, you can ask in the trade room as well. So again, if you look at the trade setup, what do you see? Cycle reversal, momentum reversal, and here, out there. So out there on that first adjustment with profit, out there on the final. And here's just another one. I'll go through this kind of quick so I know a lot of you are trying to probably take off, but here's one we did a short trade on Starbucks. So we did this with that put calendar, and we actually were able to turn this into what we call a free trade, no risk at all. So we started this on the 26th of June, it's traded at 78.67. The 1st of July, we did adjustment into a free butterfly. And then on the 5th, we had a profit take. It was up 78 per spread on zero risk. So here was the trade setup. Again, same tools, same indicators. So trade right here. We had a cycle reversal way over there, momentum negative. So we started breaking this support area, set this trade up. And did this low risk trade. with a put calendar diagonal starting out, and then adjusted this to a put butterfly. So what we were able to do this with the adjustments, we did a number of adjustments, and we adjusted this down to a trade cost of $32 per spread. See that, 32? And so then it was up to 142, so that was up $110 on that risk of 32. This then was up 343% return. All right, so here is the trade adjustment into a free trade. So now we were long the 77, put short the 75, and then long that 73 at a credit of $8. See that? So potential make 208. And, you know, got out here, but still that was a great return, $78 profit on zero risk. Now these are breakout credit spreads. We don't do as many of these because typically what we're doing, most of our trades are either going to be calendar diagonals, or butterfly condors. But this is one that we did a really short-term breakout trade. Sometimes we'll do credit spreads as well, but this is a short trade that we did not too long ago. This was on QQQ. So this was the first service that I started. This was back in 2019. All right, so we've had, you know, again, we're very selective. Don't do a whole lot of these anymore, but we've had 168 of these trades, 122 closeouts, 6 break even, 40 losers, 76% win rate. And here's one we did just recently. I'm just trying to show you all the different ones that you may get. Here's a short trade that we did on QQQ. So here's, and we did this with just a put debit spread. So this was on the 2nd of August, and it was traded at 448.50. And so here it was, new QQQ short, trade at 448.50. I said higher risk because we were in a big uptrend, right? So I said higher risk, momentum short, target 443, and then target 440 on target 2. Buy one vertical, 5 August, 445.42 put spread at around 90 cents. All right, and then I said before the market opened here on that day on the 5th, I said QQ short says markets will open hard down. If long, the 5 August 440, 441 put spread, take profit on open prior to the close of the day. But take profit on the open. I thought this was going to swoosh down and then probably go up, and that's what it did. So max potential profits 210 per spread. Okay, and then QQQ short. Here it is. When the market opened, trading at 426.50. If long, the put spread currently up around 210. Take some profit or take all your profit. Okay, so then you have that flexibility. So here it was. So we set this trade up. This was on a Thursday. It was trading right here, looking for a big push down into this 200-day moving average. Then I thought it might pop back up. So here was the trade. Did this as a put debit spread. So bought the 445, 442 at 88 cents. And then it went out right here. So it went from 88 bucks to 300. So it's up $212 right there. So that trade was trading from down. It was trading now. We set it up as 448.50. Then it was trading down to 433.92. So you can see the profit there was $212, up 240%. And then the other category of trades that I'll send out, and these are again very selective. So when we get an earnings season, sometimes we'll do an earnings trade, but again very selective. So you can see, just kind of give you a sampling of what you may have received here. So we started this back in June 2019. We've had 127 trades closed out, 91 winners, 16 break even, 20 losers. This is a really high winning percentage because these are very, very selective. All right, so you might get this one. So there's 5 different types of trades you might get. You can take them all or not any at all, but it gives you a big, huge selection based on what the market's doing. And so this is one we did on an earnings trade. This was on Exxon. This is what we call a double calendar. So we entered this on the 1st of August. Exxon was trading at 116.75. And then it was expiration the next day. We got out the next day on the 2nd. This was just kind of a one-day trade. And doing this kind of a selective trade, what we call a double calendar. So got out with a profit of 77 per spread on that. So these are pretty cool. And so you can see it very, very detailed here. double calendar spread trade for more advanced option trader, earnings before the open, etc. So go through everything you need to do on that, and just kind of showing you what you're going to get if you do sign up for the alerts. And so here was where it was trading. It just kind of bounced around, didn't do anything, but here's the main thing. So this is what we call a double calendar. And so, we've got basically what is a call calendar with a put calendar. These are really short duration trades specifically to take advantage of implied volatility collapse from an earnings. And so we set this up. The spread, total spread cost was 126. So we had 66 on the call calendar, 60 on the put calendar, and then the spread blew to 203 right here. So we had a profit of 77 per spread on that. So that's kind of just give you a sampling of everything that that I'll send out. And so if you'd like to learn more on how to zero in on these very kind of selective trades and avoid having to be your precious time, capital, and energy trapped inside losing trades that you have to manage, this is a great program for you. Okay, and so we'll go back through everything you'll get. So if you just put in that special code there, powercycletrading.com/special, right there. Click on that and then put your promo code alert20 small cap. You're going to receive then 6 months of the alerts plus 6 months of the trading club. And again, you can start this when you want. You can stop it in between, if you've got to take off for vacation or business, so you're not going to be, using the time. Okay, so you start, stop, and stop, start, stop, and it's 6 months, so it's basically 115 a month. That's 690. But if you use the promo code today, 20% off, you'll get it for 552. You can also use powercycletrading.com/elite. That'll get you the same thing. Okay. So with this package, this is everything you'll get. You're going to get my 5 trading alerts for 6 months, 6 months to the trading club. So you'll get either, it'll either be a butterfly long condor, it could be a calendar diagonal, could be when we get around the monthly time frame, we'll a lot of times maybe do a butterfly or a calendar option penny type trade setup. And I also explain how to do these in the trade room, where I have courses on them. Breakout reversals, the one I just showed you on that QQQ short, and then selective earnings trades. Hey, thank you there, Mike. Appreciate that. Let me, if I can, pass that on. Here's from another member. This was from Mike. Appreciate that. Let me see if I can copy and paste that. Yeah, so send me any tips that you might want to make it more clear. That'd be fine. I appreciate that too. Here's from Rich. He loves the Lotto Butterfly. Those are very cool. Okay, so you're going to get 5 different type of alerts that are sent out, and it's based on what I'm seeing, that I think is going to be the best for you. So basically, you're getting these trades based on my, 4 decades of trading experience, my software that I use, my research to kind of cherry pick these kind of trade ideas for you. Then I match the trade idea with the highest probability option strategy to use for the potential best return on the lowest risk. And then I outline as best as I can into the alert the steps that you need to put on the trade, the strike price, what option duration to use, the option expiration date, the series, et cetera, targets, et cetera. So I try to make it as detailed as I can, but I need to get them out as quick as I can as well. So then I do that video alert at the end of the day to kind of go through the trade with more details. So once the trade then is set up, then I monitor the trade throughout the day, throughout the duration of the trade, and suggest whatever adjustments may be needed, et cetera. And then I send alerts out on that to constantly update you. And then, use that powercycletrading.com/special, and you'll get the 20% off on all 5 of the alerts that you would get over the next 6 for 6 months, 6 months to the trading club. And again, you can stop and start when you like. Yes, it is, Rich. Okay. Hey, thanks, Samish. Here's for another really nice compliment here. Appreciate it. Definitely making my day on this. This is from Shamish. Hold on. From another member. Appreciate that as well. See if I can get that in there. Thank you so much. All right, so again, just in summary, there could be, these are the 5 different types of alerts that might go out. Calendar diagonals could be sent out, selected butterfly or long condor. This last week we did, we set up Honeywell. We did another call condor on that, and then on Friday did a put condor on CRM and CSX. We did a calendar diagonal, so did those 3 trades this week. Selected monthly penny type trades, breakout reversals, earnings trades. When I send it out, I'll send out the entry level, and then I'll also put in a option strategy that I would use if you want to do it. So then I'll do a video review of it that day after the close. Trades are listed and archived. You get then weekly Q&A, live and recorded for the next 6 months, daily video newsletter, every day after the close, 6 months, access to the trading club room, next 6 months, 6% discounts on all software and courses for the next 6 months using your promo code that you're going to get. So it's like having your own research department and professional trading mentor, but at a minuscule price. So it basically comes out, you're paying $3.06 a day. So this is going to, really help you to free up your time and focus on whatever else you might enjoy in life, more so than staring at your screen all day, which is what I'll be doing for you to, provide the service to you. So no more combing through thousands of charts, no more debilitating confusion, what strategy to use, no more agonizing over the best time frame. So, you get it all done for you. There's a nice, compliment from Dan. He said, you're very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades I took with you as I was learning how to trade options. Please feel free to share this with your other participants if you wish. And this was from Scott. He said, it'll be the best investment that you'll ever make. Go with the elite package, great group of traders in the trading room too. So just kind of one last review. We've had basically run at 79% win rate over the alerts. And when I sent it out, again, some members just want to do their own thing. They just want the trades. And so, but when I send it out, I'll give you a suggested option trade that I think would be the best to use, what the entry level will be, profit targets. And I base my targets on what we call price target mapping, which involves unusual option activity, Fibonacci levels, moving averages, etc. What option series to use, stop loss guidelines and levels to use. And then, these trades are listed and archived. With the 6 months, you get the trading club. So then that will give you my video review each day after the markets close, that video newsletter, reviewing all trade setups or, what the market's doing or looking like. And then weekly, we do weekly Q&A live and recorded each week, usually a lot of times on Tuesday. And then access to the virtual trading room or coaching room, what I call it, 9:30 Eastern to 10:30 each day during the week. 6% discounts on courses and software. You'll get a membership code that you use for that and some trader educational stuff in your vault. 6 months to the trading club, virtual trading room, market trading newsletter, weekly Q&As, 60% discounts. And then here's a really nice comment from Mike. Said, I joined last year after making a bad decision trying other services. You've been best in explaining and teaching various aspects of trading. Thanks a great deal for your expertise. Love the trade room. And then from Bennett, says, the trade room experience daily is awesome. You cannot get that anywhere else in real time, nothing like it. So that's pretty much it. And I hope to see a bunch of you back here. We'll be closed Monday, but sign up and start following us in the trade room Tuesday. Yeah, the outlook is included. So yeah, you'll get Power Outlook. So I do the video newsletter each day after the close, and that gives you kind of what I do is give you my daily outlook, what things that you need to be aware of, right? So we may have that non-farm payroll number coming up, and I explain maybe how that can affect the market, things like that. Just trying to educate you, keep you on top of what's coming up so you're not blindsided. So that's in the video review that I do each day after the close. So that's part of the trading club, right here you can see. Yeah, you're welcome, John. Okay, so use that link again. I'll give it, here's one more time, and make sure to take advantage of the discount, because I'm not going to do 6 months again anytime soon, but I thought this would be a great kind of summertime special. And then use that link, and then alert 20 small cap. Oh yeah, okay, sure. I'll show you Amazon here. Amazon's starting to look kind of interesting here real quick. We'll take a look at it real quick. This came up in one of my scans. I'll show you one other indicator that I like to use a lot. This is what we call my multi-time frame scanner. Anyway, you've got access, you can get all this good stuff if you want it. Okay, so here's Amazon. This popped up on a scan that I did. All right, so you can see it's starting to trying to bottom off this 200-day moving average, that blue line. All right, so I like to use that 4 hours so you can see we have momentum starting to shift. See, just starting. So we had a cycle reversal back here. This was back on the 5th, right? Look at that, boom. And then, it's just been floundering, but got back above the 200. Now we've got positive momentum starting to pop in, cycle 1 and 2. We've got a momentum crossover right here. So this is starting to develop. So watching that closely, that could develop in something to do. And then another one that was kind of showing up pretty interesting was CSX, came up on the scan. So here's another one that I'll be looking at next week. So this has a massive volatility squeeze going on the daily and also this 4 hour. So you can see it down here. This is my multi-squeeze indicator down here. See, it shows 3-day, daily, 4 hours. So there's squeezes going on here. So this is what I'll be looking at next week. CSX came up on the scan. Another one that came up kind of looks interesting is Chevron. I'll be looking at that one too. Plus that might have maybe some seasonal benefits here, but it's got a lot of overhead resistance up here, but this did pop up on a volatility squeeze right here. And Netflix. So Netflix, you can see it's up at the top end of its range here. We do have a volatility squeeze on the 4 hours, so this probably is going to retest this prior high. But it's starting to get pretty extended. It's not something I'd want to make a long-term trade on, but it looks like it wants to make a retest these highs. So it looks for sure it's going to probably retest these highs. All right, everybody. Well, thank you so much for being here. And yeah, and Jill, come on in the room and I can help you if you have a trade that you need some help on a repair. I can do that, help you in the room. And I do have courses as well. Okay, well, thanks everybody. I think that's everything. Have a great rest of your day and enjoy your long weekend. And make sure to take advantage of this special price. And hope to see everybody next week. Have a great rest of your day. Ciao.